Hello everyone and welcome back to another episode. I'm your host, a millennial investor, and in today's video we are going to talk about Netflix. Netflix is a company that we all know, we all love, and likely many of us subscribe to and use the service, and we want to talk about it as an investment because we know that in my portfolio tracker I have many different spreadsheets for the companies that I own and the companies that I'm interested in. And you've seen ones that I've made for like my largest investment, Amazon for example, and you've also seen ones for other one like for example Salesforce, another one that I own where I model out each and every category for their growth. Now I also did ones for like example iRobot. That company got bought out, so that's not really here anymore, so that one's kind of gone, but I still leave it up here because why not? Filled it all out, might as well leave it up, looks pretty. But Netflix is one that I'm working on, and I haven't finished. Ignore all these numbers, I just copied it over, so these numbers aren't fully filled out yet. But I'm going to finish this out and make it look all nice and pretty and model out my projections for this company and where I think it's moving in the future. Now, Netflix is one that we all know as a company, but many of us don't know them fully as an investment. Now, what I'm going to do is I'm going to give you a brief overview, a simple dive, nothing too deep, some very broad basic statistics, and talk about some of my reasons why I'm considering this as a potential investment. Because there's many different things to look at with a big moving company like this one, and a growth story such as Netflix is an interesting one. So I hope you enjoy this video. Thank you for tuning in. If you haven't seen me before, I have this growth portfolio and dividend growth portfolio that I update every single week, every single month, and I share that down below in the description, which is listed down here. So go ahead and check that out, as well as referral opportunities like M1 Finance, credit card referrals, all that good stuff. So check that out down below, which 124 people have signed up for so far. But without further ado, let's dive straight into Netflix and start talking about my opinions on the company. Now, for starters, going back in around 2017-ish, Netflix finally surpassed cable in terms of its paid TV subscribers. And I think that this comes to no surprise to anybody. Anyone that knows Netflix and knows today's consumer is not really interested in cable. Cable TV is something of the past. It's something that older people focus on. It's not really something that people my age focus on, right? Now, if you look at today's numbers, it's dramatically different. Minutes viewed in the billions as of the most recent quarter was 1.334 billion minutes views for the quarter. That is absolutely crazy. This is their most recent quarterly report that they came out with. This is straight from the report on page 5 if you want to look at it yourself. And Netflix puts this perfectly. I think this describes the overall trend of Netflix. And before I read that, I just want to show you the incredible growth story of this company. If you look at it on an annual basis, it's already pretty impressive. Going back to around 2002, let's look at that. 0.15 billion. Last year's was $30 billion in revenue, and we're expected to grow and beat that number this year, which we're already on track to do so. If you just look literally since about 2010, 2011 or so, this company is 10x in size in a little over 10 years. That's pretty impressive. Now, the quarterly numbers are just as impressive. Not only does the company continue to dominate year after year, but quarter after quarter after quarter, record revenue after record revenue, including this quarter's record number at $7.97 billion, about $8 billion in revenue a quarter now, and then the profits are finally starting to come in decent as well, with this company finally starting to put up close to positive free cash flow last year and free cash flow positive at almost $2 billion the year before that. Now, Netflix overview here, this is what they have to say. Netflix's view on streaming entertainment and replacing linear TV or cable TV subscribers. It says, quote, that people love movies and TV shows, but they don't love linear TV experience, where channels present programs only at particular times on non-portable screens with complicated remote controls. Now streaming entertainment, which is on demand, personalized, and available on any screen, is replacing linear TV. Changes of this magnitude are rare. Radio was the dominant home entertainment media for nearly 50 years. 50 years, guys, until linear TV took over in the 1950s and 60s. Linear video in the home has brought a huge advance over radio, and very large firms emerged to meet consumers' desires over the last 60 years. The new era of streaming entertainment, which began in the mid-2000s, is likely to be very big and enduring also. Giving the flexibility and ambiguity of internet around the world, we hope to continue being one of the leading firms of the streaming entertainment era. Now, I think this is so key. What's really interesting here, the main part that I want to talk about was really this little sentence right here. Read back over it one more time. Changes of this magnitude are rare. Radio was the dominant home entertainment media for nearly 50 years until linear TV took over in the 1950s and 60s. Now, notice that it takes decades for these types of things to take place. If you want to look at this right here, this is the next thing I wanted to bring up. I had my charts out of order. This is what the numbers as well as the future projected numbers look like for 3 categories. Cord keepers, meaning the amount of people that stay subscribed to boring old cable TV like AT&T, Comcast, Dish Network, all that good stuff. And then you have blue, which is cord cutters, which are people that used to subscribe and now no longer subscribe. They, quote, cut the cord. And then last is never cords. And this is really my group. If you're someone that's close to my age, which if you don't know, by the way, I'm 23 years old. Someone that is like me, that is a 20-something, a 30-something. So many of this group, notice how fast this is trending upwards. Now let me ask you a question. If you're watching this video and you're under the age of 30, my question I ask you is, do you pay for Netflix? Okay. Do you pay for cable TV? I think we probably know the answer. Now let me ask you something else. If you're watching this video and if you're not under 30, if you're 40, 45, 50, how many people do you know that are under the age of 30 pay for cable TV? Go ahead, think about it for a second. Think about kids, think about grandkids, think about nieces, nephews, little brothers, little sisters, whatever. How many of them actually pay for cable TV? I don't think it's a lot. I think many of them, either don't have TV at all or maybe just a small percentage of them actually pay for cable. And I don't think that's going to be changing. I think it's actually going to be getting a lot worse for these cable companies like Comcast. Now, the cool part is about this is that since Netflix is finally reaching to a scale that's starting to get pretty ridiculously large, you can see that their spend to their content is starting to go down, which that means, as an investor, why is that good news? That means that they're starting to reach such size and such scale that the profitability is going to start going through the roof. Don't believe me? Well, let's go ahead and take a look at the net income. This company really wasn't starting to get profitable until around 2017 when they surpassed cable, which once again reaching that scale factor is a big thing for a company like this because most subscription businesses are unprofitable. The main way to get subscription revenue to a key point of profitability is to reach mass scale. This is extremely apparent for a company like one of mine that I own, which is ticker symbol CRM. If you notice that this company really didn't start getting profitable until around 2015, 2016. Just put up some decent profits, but nothing really good, right? And it wasn't until they started to reach scale in massive size that the profits became in the multi-billion-dollar range. Now, the same thing goes for Mr. Netflix. Netflix is finally reaching a scale now that they don't have to spend as much on content, and you can see that the profitability is exploding. All here, it kind of trickled up, trickled down, some little profits here, little profits there, and then in 2017, it just went higher and higher from 186 million to 550 million, 1.2 billion, 1.8 billion, 2.7 billion, last year's $5.1 billion in profit, and then of course the earnings per share has went up as well. And you can see that while this company is finally starting to even out its shares outstanding, it's still going up, but it's finally evening out. That's even becoming more apparent as a shareholder. You can finally start to say, whoa, this company's not even really diluting anymore. If you look at this on a quarterly basis, they've had a long track record of steadily doing so, but it's barely even going up now. It's basically flat, so you're not really getting diluted either. And as this company gets more profitable, it makes it so that not only is this company not going to keep diluting, but they're likely going to start buying back shares. But overall, Netflix is a company that I love. And if you see the growth story for a company like this, I think it becomes apparent that it becomes pretty obvious that this company is likely going to be much more profitable and a lot more bigger in the future. As those millennials, as those Gen Z stop paying for cord cutters, let me rephrase that, as they start becoming never cords, as they call it here on this chart, I think it's going to be extremely apparent that Netflix has not even reached as big as it's going to be yet. Furthermore, they have pricing power and can raise prices very easily, as we've shown multiple times over the last several years. And so I think profitability is going to go through the roof. So while investors are pricing this company down to the floor, let's look at the share price. Let's see, Netflix here. Let's look at the last 5 years. This company's doing okay, and okay is kind of a lackluster term. 34% up in the last 5 years. It's green, that's awesome, but for a company like Netflix, that's basically flat. In a 5-year market where the market has been overall pretty dang green, 34% is nothing. If you look over the last 2 years, it's down 54%. Over the last 1 year, down 59%. And when you see a chart like this, a stock chart like this, you would think the business is horrible, but instead, look at this revenue and you tell me what the company's doing. So that's why I'm interested, guys. That's why I'm thinking about buying it. But other than that, I hope you enjoyed this video. Subscribe down below and check out all the things in the description if you haven't already, including signups for M1 Finance and lots of other stuff down below. Thank you guys for watching, and I'll catch you guys next time.